Hello and welcome to Euromonitor International's podcast series. I'm Jessica Ridenour and I'm joined today by Lan Ha, Euromonitor's head of economy, finance, and trade.
Hello. Hi, everyone.
We are here to talk about inflation, the thing that everybody is talking about, but specifically how businesses and consumers may respond to the ongoing inflation surge. In one of your recently published reports, you mentioned inflation as one of the top business risks in 2022. And as we can see on the news and perhaps in our bank accounts, that it's not only businesses, but also governments and consumers who are worried about rising inflation. So why is it that everyone is so concerned about inflation right now?
Inflation is on top of mind for everyone right now. Let's start with some context. Inflation basically means a rise in prices of goods and services. And as everyone knows, rising prices matters for every people. And since last year, we have seen inflationary pressure surging around the world. And this has been impacting the prices of product, impacting consumer purchasing powers and the cost of living. And this came as a surprise for companies and consumers in many countries, particularly in the advanced world, because people in those kind of economies, they have been used to relatively low inflation level and stable prices for a long time. And there has been multiple factors that contributed to the recent rise in prices, and many of them are pandemic induced. There has been a surge in consumer demand for goods instead of services because people has to shift to consumption at home and e-commerce during the pandemic. But on the other hand, the supply of goods has been constrained by low labor shortages and several bottlenecks in the global supply chain during the pandemic. Transportation costs have rocketed, and that has led to higher product prices. And overall, a strong recovery of the global economy from pandemic shocks, with rising consumption and constrained production capacity, have pushed up demand for energy and other commodities. And now, as the war in Ukraine, it adds a further huge pressure on energy and food prices, given the role of Russia as a global commodity powerhouse.
Well, yeah, I definitely feel that. And I know what rising inflation kind of means for me specifically. But can you tell me a little bit more about what rising inflation means for people and consumers in general?
In general, inflation affects consumer spending power because with the same amount of money, people can now buy less because prices are higher.
Mhm.
And lower income consumers are often hit the hardest by rising prices, especially prices of essential goods such as housing or food, simply because they often spend a larger share of their expenditure on those necessities. And another impact that inflation have on consumers is that it impacts consumer sentiments, because in an inflationary environment, people are concerned due to the growing uncertainty. So people are concerned if whether price would increase further and whether their wages could keep up with such increase in order to cover the cost of living. According to Euromonitor's international forecast, growth on consumer expenditure in many countries would slow down this year compared to last year. And this is amid a higher inflation and slower growth environment.
Okay, so less consumer confidence,
Mm,
less money to spend.
exactly.
So, what then do consumers do when prices rise, when inflation is surging like this?
Yeah, well, as price increase and consumers are increasingly feel the squeeze of inflation, many of them will adjust their spending and shopping behavior,
Mhm.
switching to lower price brands, seeking for promotion and discount, or buying in bulk are some of the changes consumer may undertake. And some consumers may also cut down their overall spending, especially spending on non-essentials items, so things that they are rather nice to have
Mhm.
than need to have. But however, how consumer responds to inflation often depends on their income and purchasing power. And in times of high inflation, the economic polarization of shoppers become even more significant than before. So, for example, lower and middle income group often feel more constrained by price increase. So they are more likely to downgrading and switching to lower price brand when they shop, for example.
Mm. Yeah, I definitely you mentioned, buying in bulk, and I drove past one of the big bulk chains here in Chicago over the last weekend, and there was a line that was, like, fully down the block of people going to stock up on those items.
Exactly.
So it's not just the consumers who are having to kind of pivot and react to this inflation. So businesses are having to react as well. As inflation and prices of raw materials and wages for their employees and transportation are rising, what does this mean for those businesses?
Yes, manufacturers have faced a rise in production cost since late 2020 because the price of energy, of raw material, of transportation, and wages, so that everything that manufacturer need to produce goods,
Mhm.
they are surging. And this is because of disruption, as I mentioned earlier, disruption in the supply chain and labor shortages. So, for example, the manufacturing producer price index, which is a measure of price changes from the perspective of manufacturers in the US, in December 2021, it increased by 15% over the same period last year. So, as production costs are increasing, company profit margins will be eroded, and that means simply a lower profitability for business. But also, on the other hand, a company can also face the risk of lower sales and declining revenues because consumer spending power declines, as we mentioned earlier, and also because they change their shopping and purchasing behavior due to higher prices. So if business do not understand the changing dynamics of consumer behavior and their income and do not respond to that, there is a risk that they will lose customers.
So what can companies do then to help kind of cope with these higher production costs and inflation?
Yes, higher production costs and rising inflation are definitely challenging for businesses nowadays. And we have seen companies adjusting their business strategies to cope with that, to maintain profit margins or retain their growth momentums. Some large consumer goods company, for example, they have passed those higher costs onto the customers, while other adopt targeted pricing strategies by revising their product portfolio. For example, enhance private label offering or focus on the higher price segments in order to maintain profit margins. And these are measures to tackle inflationary pressure in the short and mid-term. And they are often not one size fits all measure, and requires business to assess their value chain, to understand the market and the consumers. For example, raising prices can have offset higher costs, but it depends very much on the company's pricing power and can be very specific to the category or brand. And also, the consumers' willingness to pay higher prices could abate if inflation persists, and they increasingly feel the hit of higher bill from everything to food to energy. So, that with that to say, in a longer term horizon, it is important for company to reduce inefficiency and build resilience across their supply chain in order to cut costs and mitigate the impact of any supplies and price disruption in the futures. For instance, we have also seen some manufacturers that are now fostering their innovation capacity and seeking for cheaper alternative raw material in order to cope with soaring prices of some major metals, for example.
Interesting. So you speak about in the long term working on these innovations. So
Mm.
do you think that inflation is here to stay for the long haul?
Yes, according to our latest forecast, global inflation expect to rise significantly from 4.3% last year to over 7% this year,
Mm.
before it slowed down to around 6% in 2023. And at the moment, there are several factors that speak for high inflationary pressure to remain throughout the course of these years. And most significantly now is the pressure that coming from higher energy and food prices due to further disruption caused by Russia's invasion of Ukraine. And over the long term, factors like climate change, the demand for more sustainable product and services, and but also shrinking labor force due to population aging. These are all factors that can cause further pressure on production costs and prices over the long term. Therefore, what I think is important for company now is that they should remain alert in this sensitive consumer environment by tracking inflation, tracking price and consumer behavior dynamics in order to build effective short-term but also long-term strategy around their pricing, their portfolio, value change, and also business model.
Okay. So the long and short of it is inflation is here to stay, and businesses need to stay informed so that they can follow what consumers are doing.
Yes, exactly.
Yeah, great. And I know you wrote an article about this recently. If our listeners are interested in learning more about how consumers and businesses are reacting to inflation, what's the name of that article?
Yes, the article names three main risks facing business in 2022: Omicron, supply chain, and inflations.
Okay, great. Well, thank you so much for joining me today. I feel like I know a lot more about inflation, and there certainly is a lot to learn right now.
Thank you.
If you're interested in checking out that article and many more, you can go to euromonitor.com/insights. Thanks for listening.